Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Back on with this is Rohit Srivastava. He's the chief investment officer and portfolio manager with C3 Fund to give us an update on his AI-based cannabis sector for that particular index, predictive analytics and technical analysis. Not a lot going on, but I don't want to jump ahead. Rohit, thanks for being back on the podcast.
Thanks for having me, Josh. Just a little bit of disclosure, which we always talk about, that this is all for entertainment, this is all for learning. There is no financial advice given here. Do your own analysis and do your own research before you invest in this. And giving a little bit of update about the C3, we have a functional fund and we have been running that right now. But right now we don't have any equity to buy at this point, and later on you'll know why. And so first, let's talk about the overall cannabis index, which is like a WIX. Like I said before, that's like a WIX, which just gives you a gauge about how good or bad the situation is for the cannabis market overall. And this is from the inception, and over months we have seen the different patterns. This is what it was about a month ago. This was 2 weeks ago, and this is where we are today, and as of yesterday. And you see that it broke all the support, but it is hanging on to the 475. And at this point, it can either revert back a little bit to 4.5, or it can head towards higher. So it is at a decision making. And usually, if it's undecisive, we look at the cash flow. And that's what we're going to do next, which is here. This is a cash flow from the inception, and over the year, over the last weeks, this is the direction has been. And last week we talked about that it has reached to a peak on 612, and it had been heading towards up, but I think it was at a point where it was starting to trend down. And we did talk about that it is at a point where it's basically trying to trend down. And so it is trending down. And that's what we are seeing this week, that more cash has been came out this week. And what it really means is that, a lot of people have cashed out the gains, which basically was in the last couple of weeks or months, the gains that have been happening. And my analysis at this point is that I think it will probably fall further, and it will probably come back to the average trading value before it starts jumping back again. So I think once we see a big leap this week, I'm guessing probably with this week, we might see a big leap going down, or it might not be a bad idea to jump into some of the stocks which we have a confidence on. We, on our hand, we probably are not going to get into any of the trades, and mostly because we want to be safe than sorry. So we basically are trying to get a confirmation before getting into any kind of trade at this point. So, but my point out of all of that was that it is at a point where there have been some cash taken out. The volume has been low, but some cash has been taken out, and looks like that it could go even lower, but looks like it will revert back following the trend, will revert back pretty soon. So long story short, we are not holding anything. We were not holding anything last week. We're not holding anything this week as well. We're not buying or we're not selling it. There's nothing to buy at this point for us. And what it really means is that our gains are just the same as what last week, as of last week. However, the other trades which you're seeing, the MJ and POTX, they have lost about 4 to 5% as of yesterday, and today probably they lost another 5%. So it has been a downtrend at this point, and that's where we basically stop buying anything to avoid any kind of losses for us. So that's what that's what the algorithm tells us to do. Summarizing, it's still holding the support of 475. We're expecting a short pullback again. a little bit, no holdings happening, and the gains are still the same as what we have. So we are on all cash at this point.
Yeah, good news compared to the other competitors. The whole market has been hammered, but not having anything invested obviously is good. Very risk averse, but we don't have to trade on emotions, and we don't have to prove anything. As you can see, 77% year to date over MJ, and about 137% since our incubation last August against POTX. Phenomenal returns, Rohit. Looking good.
Yeah, thank you. Yeah, like you're saying that we don't have to trade every time. It's not based on emotions. It's based on completely when the algorithms feel that it's the right thing to get in. And the emotions, all the emotions are actually put in the algorithm to identify when we are getting emotional and we are not. So I think that's the key part of it. And we'll probably have some better update next week about more update about next week about is it a good time to get in for us. So
right. And obviously our AI robot is going to pick that opportune time, but for somebody else, they might want to consider dollar cost averaging on the way down since they can't time the market. But more than likely, we probably won't be picking up any securities this next week until maybe next week, but you have to come back to the Talking Hedge and find out.
Yeah. Well, and just to give a little idea about that, I think, so for example, here where we are at SPY in general is that it is hanging on to this 200, and I'm talking about SPY because that is probably a lot reliable moving fund to tell about what overall the market is doing versus trying to take something about MJ. And I can jump into MJ as well and explain, but you can see that it is hanging on to this 200-day moving average, and also that it is actually at a point where it is ready to intersect the 250 are ready to intersect on that. So those two are a very critical situations for a trending for most of the algorithms to function. So you might have seen like in the last 1 week here, every time it has tried to touch the 200, it has pulled back on that. Every time it has pulled back, and today's move was probably very critical. And even though it looks like that it is basically heading towards down, you got to watch the volume. The volume is really low at this point, and let me show you the volume. So the volume here is like about 111 million versus all these other days you had very lower volume, but the average volume of that is about 120 million. So the volume is low, and with a low volume, downside is a little bit threatening, but it's not super threatening. We probably have to wait for maybe a day at which there might be a completely breakdown of the market. And also at this point, I think one other thing I wanted to point out that the 13-day EMA is also greater than the 5-day EMA, which is a signal that the market is trending towards downwards. And just the change happened just yesterday. As of yesterday, that change happened. So it was a signal that the market is trending towards downwards. Anyways, I think, but overall, I think the market will turn back again up, but I think it is probably going to be 2 weeks of choppy before one week at least, if not 2 weeks of choppy before it starts heading back up.
So just to highlight the volatility, probably this is the first time that traders haven't sold in May and gone out to the Hamptons. Selling may go away. So There's a lot more going on with the pandemic and the economy and everything else, probably for the first time in 5 years. Maybe 2015, that was fairly rocky. And then 2011, obviously 2009. So a lot of traders are still active. There's a lot more on Robinhood platform, a lot more people opening accounts than traditional platforms like E-Trade and Scottrade, kind of affecting what the market's doing with a lot of speculation. You can see that in Hertz, for example, bankrupt stock. But all in all, there's a lot more activity. There's a lot more volatility than you would normally see in the summertime.
That is correct. that you will see relatively more volatility than most of the time of the year. We have seen that. But I think you're right, and partially also that there has been a lower volume as compared to like during this phase probably. So what I really mean is that here, like, even though there was a high, as soon as there was a high volume, the volatility was pretty high, like 1.8 million, and every time the stock is going down, it's a higher volume. When it's coming up, it's a lower volume, and that itself is like a signal that the market is in a super downtrend. But here, when it goes, it's up. The upside is the volume is very high. When it's going down, the volume is very low. Like today, the volume is like 446 for MJ, 446,000. Yeah, so the average daily volume is about 771. It's like half of it. So even it looks like the market is going down, but it's probably like some of the nervous traders, or like you're saying that some of the traders who have not taken vacation and they are staying there. Those are the ones probably who are just actively trading and trying to do that. So.
Yeah. So regardless of activity, I mean, it's not really going to help them if all these other algos are in line selling. So we're just going to have to wait and see what happens. So with that, we're going to roll this one up. I want to thank my guest, Rohit Srivastava, Chief Investment Officer and Portfolio Manager with C3 Fund. Rohit, thanks for being back on the podcast. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.